Hi, I'm Will from Heartland, and I'm in California, which is such a unique spot. Behind me are the Santa Ynez Mountains. It's a mountain chain that runs east to west, which is unique. Not many mountain chains in the lower 48 do that. As I swivel around here, you can see the Pacific Ocean. You're actually looking south, which is a bit counterintuitive. You could be looking west at the Pacific Ocean. You might be able to make out the Channel Islands off in the distance there. It's a national park. I always get a kick out of this view because between me and those islands are some oil platforms that are scheduled to be removed over the next decade or so. Looking at those platforms, I can't help but ponder California's energy situation. It's quite apparent too when I see the elevated price of fuel here as well. The state is sitting on a sizable crude oil reserve base, yet production has been in secular decline, so much so that nearly 80% of that crude oil consumed in the state comes in by tanker. To make matters worse, the amount of refining capacity continues to dwindle. In fact, Phillips Refinery this fall announced that in December 2025, the refinery down in Los Angeles will be closed. So I suspect the premium at the pump here will remain elevated versus the national average. Enough about energy here in California. I will come back to energy. I wanted to circle back to our investment process at Heartland, get more into the portfolio construction angle that we discussed in November, because we get asked all the time, how do ideas make their way into the portfolio? I think traditionally asset managers like to talk about their universe and what criteria they utilize to whittle down that universe to their watch list and ultimately the portfolio. And I think we take a bit of a unique perspective that we're constantly assessing the portfolio from a needs standpoint. So back to that November discussion of ours, talking about sectors, we were underweight a particular sector that might suggest we have a need there. And the same would be true from a factor perspective. We're constantly assessing our exposures to factors like momentum, dividend yield, size, profitability, leverage. And the idea here is just to create greater awareness from a factor and sector standpoint so that our 10 principles of value investing or security selection drives our performance. Now, as it relates to criteria, really our 10 principles of value investing is going to come into play, but a tried and true screening mechanism for us is to monitor insider buying. And this fits with what we talked about last month. If you see insiders buying stock, whether it's the CEO or the CFO or a director, that checks the box in terms of alignment. Their interests are aligned with ours, and it also might suggest that valuation is attractive and or that business fundamentals are about to hook up. Interestingly, we have been seeing insider buying in energy, namely in the refining industry. If you want to hear our thoughts on the refiners, check out our website. Thanks for watching, and Happy New Year.